this is Jeff Scott, and this is 9:25 on June 24th, Saturday night, and this is my top-down review. Obviously, being a Saturday night, there's no futures out or anything that's going to influence my discussion. I entitled today, Location, 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 not just about real estate. I think last week I showed you that 6 out of 10 and 7 out of 13, give or take, of the industry groups that I liked were healthcare, and I urged you to get long healthcare. I showed you biotech, I showed you BIVV, I think it was. I showed you Celgene, Gilead, and others, and this was a week to be long biotech, frankly be long healthcare in total. And like real estate, it really mattered about the location, because if you were in a lot of the other industry groups, it wasn't such a pretty week. As always, it's for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I am not affiliated with any software vendor or trading company. Tools I demonstrate are those that I use in my daily trading. I paid for all the tools I demonstrate. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. I also like to add that from time to time I'll talk about options. I urge you to review the options industry consoles, excellent guidebooks and pamphlets that talk about the risk of trading options. And if you trade options, you do them at your own risk. Somehow Guy Cohen fell off this picture, but for those who haven't been here before, my whole style, and when I teach people, when I do occasionally, is to be your own guru. Learn from many, pick out what works for you, create your own trading style based upon what you think are the best of, and then go and become your own guru. So I started with Can Slim, improved by Morales and Catcher, as well as Ian Woodward and his sidekick Ron Brown. But it's all, a lot of it's based upon the work of O'Neill. John Person, to me, gave me tools to take the trades, manage the trade, and taught me a lot more about trading. And from Can Slim, perhaps it was a little bit more about stock picking and money management as well. Speaking of money management, Van Tharp is the guru of money management. George Lee's my buddy from Canada, who I have the fun opportunity of sharing the podium with from time to time. And what fell off this slide is Guy Cohen, OptionEasy.com, and FlagTrader.com. I had a lot of requests for how do I make it easier. They don't want to update software. They just want to go to a website and be told what to buy. And I think you can get a lot of good out of Guy's website. I own a lot of programs. I try and hide my background so you don't see all my icons. I need TradeStation and or Thinkorswim. I find them to be mutually benefit to work together. Genesis is a high-end charting platform and scanning platform. I'm really good with futures as well as stocks. I use that intraday, but usually not in these webinars. For my analysis, I like HGSI and EdgeRater. I do seasonality, but I do seasonality after I pick my picks to make sure it's not in my face. And there's a lot of websites that I use as well. Here's the website for highgrowthstock.com. Again, I have no affiliation except I'm an unpaid volunteer support person, an educator. If you go on your investment strategies or investing strategies, you'll see my name in a lot of movies. Same thing with Ron Brown. If you're new to HGSI, I have some specific videos about how to use the program as well as the vocabulary that I use. If you email me at hgsidoc@gmail.com, I'll send you some links at no cost. And speaking of no cost, it's a free 30-day trial, no credit card required. Stock patterns are cyclical. I talk about this every time. This has been a tough market. The NASDAQ, apparently on Sunday last week, was ready to rip roaring, and some of the other stocks were ready to go down, especially energy. It's a hard market to trade. I mean, I've not seen such divergences between the different indices and different industry groups. So it's not one market, one pattern. But I mean, clearly we're not at the beginning of a bull. We're much closer to the end of a bull. But every time I think the market's going to go roll over, we see another leg up. That addresses how I trade. Since I'm in this period of uncertainty up at the top, I do have more cash than normally. I have some smaller positions, and I've sold some premium. And frankly, I bought some puts on some of my richer positions, although that has been working too well for me lately because the market keeps going higher. If we speak about the market, what stands out to me when I look at the Friday sector review from TradeStation, I see the financials here, especially XLF and KRE related, were all red. Some of the insurers started to look better. Broker dealers were mixed in credit cards. I look at industries and technology strong, staples improving, discretionary improving, retail improving, utilities look awful. Healthcare was mixed, I guess, mixed to good on Friday. If you looked at this on Thursday, you would have seen almost every biotech stock up 3 or 4%. When I see that, I know that money is coming into biotech or into that industry group. I watch this real time during the day. There's no fancy indicators. You can have up to 1,000 quotes at a time in TradeStation or in Radar Screen. I'm not sure this even counts because there's no indicator. And just broke them out, or John Person broke them out, and I added a few things by industry group and some of the major industries. And then I watch them during the day to get an idea where money's flowing. So looking at the major markets, this is daily charts from Thinkorswim. Upper left is E-minis, middles, then Qs. Upper right's the YM. Down here is IWM because I'm not buying TF Russell Futures. Too expensive to buy the data. This is the VIX and this is the dollar. So first blush, it's clear that the standouts are both the Russell and the NASDAQ had pulled back and then had big moves up on Friday with new PPS buy signals. The S&P maintains above the 17-day moving average in a buy signal. Interestingly, still above the 17-day, which is that green line. The YM actually had a sell signal on Friday. The VIX has popped up a little bit, but still can't get above the descending 50-day moving average, and the dollar is rebounded some, but is still pretty weak. If you don't believe we're still in a good market, this is exactly what I said last time. Just take a look at the weekly charts. The 17-week is above the 50, is above the 200 in every pattern that we see. And the only place where we're close to the 17-day moving average and we're above it is on the IWM. And again, on a weekly chart, you could see that the VIX, although it's moved off the bottom, is still historically low, and the dollar is struggling to get above its moving averages. Sometimes I like to put multiple time frames, one of each index on top of each other. So this is daily, weekly, and monthly. And from left to right, we have the E-minis, we have the NASDAQ futures, we have the Russell futures, with the NYSE and the Dow futures. So if you look at the monthly, everything is left to right, lower left to upper right. Some are more steep than others. You look at the weekly, exact same pattern. You look at the daily, I would say that the E-minis, the NQs, the TFs all look good. NYSE looks fine, and Russell broke down below its pivot moving average and has a sell signal. So I would say, except for the Russell on the daily, things look pretty good here. Now, things that I don't understand. Both the 10-year and the 30-year, this is from Telechart 2000, you can see interest rates continue to fall. And tell me, and you can see here, falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders, rising rates, banks, regional banks, and insurers. It wasn't that simple. I did see some MLPs pop up. Utilities, depending on what they were, some of the electrical grid companies popped up. Certain REITs, especially non-shopping center REITs, look good. And the home builders look like they might have had a nice run. Maybe they're topping. We'll have to see. AD line's hard to see, but trust me that the white AD line on both the medium and small stocks and the large caps is going up at a higher rate than the S&P 500. So you still have a positive divergence, which is better than the opposite. If the AD lines were falling away from price, that would suggest price was going to fall. Breadth, I look at a number of different things. These are stocks above the 200, stocks above the 40-day moving average, and you could see, you can't really see it well, but they've come down a little bit this week versus last. Same on both of them. So weakened a bit, but certainly not oversold. This is the 3-month new high, new low, which, contrary to the last slide, actually moved up a little bit, but just slightly, and is not giving me a signal. The daily McClellan is interesting, the weekly McClellan as well, and you could see that the McClellan oscillator just has very narrow ranges it's operating in. I don't know how to explain that except to say I look for extremes, and there's no extreme. Perhaps it has to do with the narrow moving market that we have. And then on both the daily and the weekly, the summation index has lower highs and higher lows, so it doesn't really give me a signal either. Moving over to Edge Rater and looking at some of my other indicators of the market. The buckets are as neutral as you could be. And what this does is takes the S&P 1500, puts a Bollinger Band on each stock and counts out how many are above the midline versus how many are below, 51-49 split. Then takes the first 0 to 10%, and that's this bucket. And then 10 to 20, 20 to 30, 30 to 40, 40 to 50, 50 to 60, and so on and so forth. And to see how many of the stocks are at the high end of the bands, low end of the bands, or in the middle. And clearly it's a bell-shaped curve in the middle with very few stocks at the extremes. Then I look at the Hindenburg. I'm looking at it now predominantly on the NASDAQ and on the NYSE, and they diverged. If you go back to May 31st, it fired on both these instruments. And you can see here in red, Hindy and Hindy. Now, the NASDAQ has gotten close with 3 out of 4 signals firing when you see the red here, but it hasn't fired yet, showing some discordance or divergence. On Tuesday and Wednesday, the Hindenburg did fire on the NYSE. Now, when I start to see a pattern where I have multiple Hindenburgs firing, I have to be nervous about the market. And even though it keeps going higher, in the back of my mind is the be careful button and close all button. I haven't hit it yet, but I have to be aware that we could see a significant drop from here. And this is just further evidence of what you already know. Market tone is neutral. It's pretty much yellow across the board. I'm looking at this third set of colors, various indexes at the top. And if I look at sectors, it's gotten considerably weaker. Down discretionary staples, energy and utilities. The only green sector is healthcare, and you could see how it's deteriorated over the last several weeks. Canaries in the coal mine. I like to look at stocks that are leaders and see if they can give me a clue as to what the market's going to do. Well, the canaries are simple. They're Apple, they're Facebook, they're Netflix, they're Google, they're Priceline, they're Baidu. And this is an artificial index made up of equal dollar amount of each of the stocks. And you could see it's had a great run up off the bottom that I measured back here, sitting on the 17, right below PSAR dot, bounced off the 50. This certainly looks to me like it wants to go higher. Mitigating against that is the bongo is red. And you could see on my chart the Hindenburgs are posted as well. Now, I want to introduce you to something that we haven't talked about in ages, and that's called the E-Index. E-Index, developed by Ian Woodward over 20 years ago. I've had the opportunity of participating in the creation of many of these. They're done typically near market tops to identify the leaders. I make a group index of the leaders, and I know when the leadership group rolls over, that might give me a heads up of change in the market character. Typically, when we look at an index of these leaders, we see a very tight lower left, upper right chart pattern. So, if it falls, it could be a top. It could also be a vicious rotation. Key points, I look for leaders, tight patterns, lower left, upper right. No more than 2 stocks per industry group. So I take each industry group that I find stocks in and I whittle them down to 2. The next is very important. This is not a buy list. By definition, most if not all the stocks are extended and are not at good buy points. We use this as a signal to tell us when the market's rolling over. Yes, the leaders will continue to go up, but you need to get off at the right time or you will be crushed. This is a higher risk time in the market than be if we're coming off of a bottom. So, on the left are the stocks based by industry group that I came up with on my chart review. I am not saying that I'm going out and buying these. I'm saying that I want to construct an index. Now, the right index should be traveling above the 8-day, should be tight and lower left, upper right. 17 is above the 50 is above the 200, and there's no question that I found myself a very tight rising index of stocks. So I'll be watching this intraday and every day. I'll report about it every week. And when I see this breakdown, I'll know that something's happening in the market at large. Know your news and earnings. I haven't looked too much at this. In dark black, this is from Bloomberg, are the Fed speakers. We've got some Fed numbers, a lot of auctions on Monday, consumer confidence, Schiller Home Index on Tuesday. We've got some mortgage applications on Wednesday, as well as the petroleum report. Thursday, we got some jobless claims. And then Friday, we've got some settlements, and we have PMI and sentiment and rig count. You can see on the right, it's a relatively modest week as we kick off the earnings season. Obviously, if you have any of these, like Darden, KB Homes, Monsanto, Worthington Industry may give us a clue on the steel industry, Constellation Brands, Greenbrier, Micron, Nike, they could be a big earnings pine for you. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. That quote is attributed to me truly. Market thoughts, healthcare, broad-based breakout, technology getting ready for another leg up. That's what it looked like. Is it time for a summer rally? When I looked at the seasonality of this time of the year, it is strong seasonality. So that's possible. Yes, multiple HINDYs on NYSE, most likely related to energy-related stocks and probably financials. Current rally is getting narrower and long in the tooth. Top is likely near, but topping is a process, not an event. Need to see evidence of indices rolling over before I give it up, but not a time to be a bull hero. I created my new E-index to give me a clue when we see the leaders roll over, which might be indicative of a top or another rotation. And top-down investing works. If you follow the rankings last week, you were in healthcare and made money. Typical top-down agenda, and we'll certainly get through the first 3 bullet points, and then we'll see where we are for time. Now let's go on to the charts. So I got my TradeStation working today, so very quickly I'm going to go into TradeStation, and I'm going to look at the major indices to get a sense of what the market is doing. We're going to start with the E-mini. I have a 5-point with a kicker, and the kicker is something I added terminology for. So the first thing I look at, are we in a PPS buy or sell signal? The PPS signal is available on Thinkorswim and TradeStation. Charge on TradeStation, it's no charge on Thinkorswim. We are in a buy daily, weekly, and monthly. That's bullish. What's the color of my paint bar? Green is bullish, I can't be shorting. Red is bearish, I can't be buying. Blue is neutral, I can do whatever I want. So I got a blue paint bar. 3, is it at the top or bottom or in the middle of the envelope? It's in the middle. 4, are there any dots suggesting that we have some MACD divergence? We have them on the weekly. And 5, where are we on the high jump? We're at 61. And then I'd add 6, where are we on the weekly bongo? Weekly bongo being green, that's my timing indicator, a buy. And you can see the E-mini's been in a buy signal ever since the end of April. So E-mini looks strong. YM, let's see real quickly. Oh, I hate when it does this. It's in a new sell signal here. Okay, that's interesting. Again, banks and energy. Blue with MACD divergence, 55%, but still bongo green. So clearly the YM or the Dow futures is weaker than the E-minis. NQs should be where the money is. Apologize for this. And you could see it's in a buy signal in green, still in a weekly sell and a monthly buy. So the NQs had pulled back, and they'll probably revert to a weekly buy if they continue to move any higher. The Russell futures are weaker, as you could see. Oh, come on. If you could only see, it's in a sell signal, but it did pop up green on Friday, and that might be predicting that it's going to turn colors. Again, the bongo's green, the high jump is fine. The daily, the weekly, and the monthly, rather, are in buy signals. So the S&P and the NASDAQ, clearly the strongest of the markets. Take a look at the dollar. New sell on Friday, weekly sell, monthly sell, red bars throughout. The dollar's weak, not more to say about that. Speaking of the VIX, or speaking of weakness, let's look at the VIX. And the ditto, the same thing, down on daily, weekly, and monthly with red. VIX looks very weak. And then gold. Gold is in a new buy signal here. It's in a buy weekly and a buy monthly. That's intriguing, but red, and blue, so the paint bars don't look great. Lower part of the channel, high jump only 70, daily bongo red, but it's in a weekly bongo green. Gold looks buyable, but not without risk. So that gives me a sense of what's working and what's not working. Then I like to open up HGSI, and let's just go right into major market groups on the bottom, thanks to Ron Brown, who continues to update them. We'll go into Major Markets Plus, and I'll look at a top-down view and see what I got in here. I've got all the major indexes, gold, silver, VIX, and dollar, biotech, technology. Let's rank them by momentum, two-day force. And I've only got, only 12 groups. Well, that's right, this is indexes, 12 to the upside here. Let's go back to, I want to use a top-down ranker, which is just price and volume, and looks at 1 day versus 1 week versus 3 weeks. And on this, you can see small caps, NASDAQ, mid caps, transports, biotech at the top, volatility, dollar, commodities, and even S&P 500 and 100 closer to the bottom. That shows you where the strength was on Friday. Let's open up the S&P 500. So basically, across the top, let's go into a simple view. The top line is the weekly bongo. That's my buy-sell signal. I don't like taking buys when the weekly is red. The next one down is the daily bongo, and when the weekly is green and the daily is red, I'm pulling back in an uptrend. So I might be identifying times to be looking. I've got an 8-day exponential, then a 1750, and 200-day moving average that are simple. This line down here and here, those are Hindenburg omens. I've got two different calculations to make sure I don't miss it. Obviously, candlesticks. These red and these blue represent kahunas. Red is bad, blue is good, and they're a sign of momentum and a big move. And then down here, you might see some greens and reds. Those are Eurekas, which is an exuberant day to the upside, and Phoenix, which is an exuberant day to the downside. They often predict quick reversals. So we take a look at where we've come from on the S&P 500. I've done this a few hundred times, I'm sure. And if we go down from where we stopped at the 200 to where we are today, where we closed above the 17, we're up 353% since 2016. 17% rather, since 2016. So a very nice run, actually, since the election day. And if you looked at intraday, you'd be up even more. So obviously, we've had a big move. We're above a confluence of the major moving averages, which should provide potentially support. It looks to me like it wants to go higher, but certainly a thin 3 bars in a row that look like indecision. My bet is it goes higher. If I take a look at the Dow Jones Industrial Average, looks the same, not going to spend any more time on it. If I look at the NASDAQ, you can see the NASDAQ pulled back sharply, but like the S&P 500, sitting on its moving averages. Big volume on Friday, probably an option expiration weeklies plus re-indexing of the Russells. It too looks like it wants to go higher. And lastly, the Russell 2000, which is probably the weaker looking of the bunch. And it too looks like it's going to go higher, although it's clearly in the midst of a pullback here. It looks like it wants to go higher as well. If we drop now and look at things that don't want to go higher, let's take a look at the dollar. Dollar is bouncing around the bottom, hard to get excited. Let's take a look at the VIX. Pretty darn low. Let's take a look at gold. Is that where you want to go? Run to gold, yellow metal? Not me, although based upon a new person buy signal and the fact it held support down here, if you can break above this 50 and the 17, maybe retest like it did back here, move up, I might be interested in nibbling. Notice the weekly bond goes green. Silver looks less good than gold. And lastly, let's take a look at biotech. And you can see biotech broke out. Now let's count back. 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. So we were looking at biotech last week, and I just love the fact that it pulled back and stopped on the 50-day moving average. Looks quite strong. All right, now we look at the industry group. So I've got a sense that my guess is the market goes higher from here, and right now led by S&P and NASDAQ. Now I'm going to drop this down and go into industry groups, and I'm going to maximize this window, and you can see I've got 173 groups. Now on the top down view, which is not how I look at group rotation because it does look as long as a week and a little points for 3 weeks, you can see the strength in biotech. Let's take this down and look at a 2-day force. I end up with 74 industry groups. 2-day force down, I've got 4. Looking at what's down, food and drug stores, automobile, investment managers, and healthcare supplies. Not a lot that they have together, although food and drug stores are related to healthcare supplies. So let's go look at the upside and take a look at what we got here. So these are the groups that are up. This is the relative ranking. It's ranked by 2-day force, which may be too short at the end of the day, and we're looking at some alternatives. And let's take a look at some of the top groups. So semiconductor devices, change the group. We've got 3 up here on the top. I own some below it, so I'll go beyond the first 3. Now I'm going to take that initial chart view I showed you, and I'm going to add some things. I'm going to add the high jump bar, which is this green line. When it hits the top, I know that I'm extended. Red candle lows and green candle highs. The next thing with nothing in it are Bible gap ups and the squeeze and the mobile breakouts. So here's a stock in an uptrend, shallow pullback, new pocket pivot, mobile breakout from a squeeze. Everything is green, good volume. I think that NXP Semiconductors is ready to go higher. If I remember correctly, they're about to be bought by somebody, and there's sort of an activist shareholder who's bringing us up to the world that they've appreciated much less than their peers because of the sale, and that it's being underpaid for. So I don't play arbitrage, so I wasn't going to chase it. Acalero, Kahuna, sitting on the 17-day moving average. Ultimately, it would take out the PSAR dot, these prior closes, but this one looks like it wants to go higher. Again, I'm pullback to support with a Kahuna is what I look for. Impinj just keeps going higher. I don't think I'd be buying it fresh now, but keep your stops close because when the market turns, this will come down. Dropping below AMD. Has broken out with some new chips, apparently faster than Intel. AAOI, I think, setting up a good buy opportunity. I'd like it more if it had a Kahuna, but the weekly bond goes green, the forces are green. It did have a mobile breakout. If it takes out the 17-day moving average, I'm probably going in. Other things that are new, these red dots are Wilder's PSAR, and this gray line is the industry group. And down here I added pocket pivots on balance volume. These are the Eurekas and Phoenixes, and down in the very bottom in red and blue will be the Kahunas, big and small. First, some materials. Again, sideways move, moving up off the 50 with a Kahuna, pocket pivot, everything green above, and a Bible gap up. That one looked interesting as well. Broadcom, waiting to close its merger with Brocade. Sitting right on the 17, give me some momentum, and I might be chasing this one. I think that's good. So a lot to like in this group. So moving down. Sorry about that, hit that by accident. The next group down, right click back, is biotech. So Portola had an approval on Friday of a drug that has a potential blockbuster. Their market cap's $1.2 billion. It's too cheap, it's going higher. Not to say it won't digest its gains for a couple of days before it goes higher, in my opinion. Here's a big move on Friday. Notice it was sitting on the 50 with a bunch of kahunas coming in this week. Gilead, highest close it's done in ages, stalled out the 200. For me to believe a believer in Gilead, it's going to have to get above and close above that 200-day moving average. Kite Pharma, probably nearing an approval on the first or second, depending on when Novartis gets approved, CAR T therapy for relapsed lymphoma. Getting closer and closer to the smart bombs that were hypothesized a long time ago. I'm long this one. Big breakout this week. Made me very happy. Celgene, I specifically talked about this on Sunday. Back it down 1, 2, 3, 4, 5. And I talked about how it just broken above the 50 on a kahuna and the bongo turned green. That was a big buy signal. I took it. I hope you took it. Still stay long, Celgene. Juno, in sympathy with Kite, they have a similar product breaking out. I mean, what a beautiful looking index. Beautiful look, yeah. Biotech index. What a beautiful index. All right. So that was some of the big boys. Oh yeah, let's just look at BIVV. This was one that I said to buy on Friday, on the weekend. Again, count back 1, 2, 3, 4, 5. It was sitting on the 200 with a pocket pivot and a kahuna mobile breakout from a squeeze in all green. If you ever came to my live meeting, you know that's the signal I'm looking for. It was also a high close doji and a PPS buy signal that day. And that turned out to be a good buy, and I'm up on that position. Speaking of positions, let me just take a quick break here. Last week was a great week. This is a group performance analysis within HGSI. It's not fair because it doesn't look at position size, stops, money management, and assumes that the stocks that were in your portfolio on 4 o'clock Friday were still there at 4 o'clock this Friday. But it does give you a clue as to what's working and what's not working. It was a great week for me. It says 2.59. I think it was quite a bit better than that, but I'll take a 2.59 at any time. Most importantly, the S&P 500 was pretty flat, down 0.62, and this is looking from closing day Friday to Friday. Other things that are of note, Market 250 was at plus 0.27, IBD 50 was at 1.3-ish, so that was really a positive week on our picks. Even my buy watch was up about 1.08%. So top-down stocks work. High-growth stock investing works right now. It doesn't always work. Depends on the market. Right now, the market's our kind of market. Interestingly, that oil exploration and production stocks made the group because they've been so weak. Let's just take a look and see if anything is buyable here. This is Rice. This is EQT. They're buying Rice. Moving back up. Doesn't do anything for me. Here's Rice. It broke out here. It's being acquired by EQT. RSP Permian, this is a typical pattern down on the bottom, trying to move up off the bottom. Cabot Oil and Gas, a little different, already broke above the 50 with a couple of kahunas, and all green up here. This is a different pattern, and I am currently long Cabot Oil and Gas. Parsley Energy, turn around. So I don't see a lot of stocks here that I love. And then I wonder, do I want to start nibbling on stocks like Diamondback Energy? And to be honest, nibbling is dangerous. So the answer is probably not. But this is a stock that went off a monster run from 70 to 115 in 2016. It's now pulled back to less than 90. Never thought I'd be able to see it less than 100 unless they split the stock. Fourth one down is Specialty Pharma, very similar to biotech. And interestingly, Valiant, I own a couple of these. I don't own Valiant anymore. I probably ought to, and I'll be looking at Valiant at some point. It's got to get above the 200 and stay there. You've heard me say that before. Cara Therapeutics, sitting on the 8 and the 17, just above the 50 on Wednesday, had a big breakout. That's a stock that I've been long on. It's had a nice move off of 6 earlier in the year. Also long Esperion, which had a big roll-up, went sideways, and look at this, same pattern. sitting on the major moving average and a kahuna, Mobo breakout from a squeeze. Next day turned positive on the bongo. I think Aspirion looks interesting. Keep in mind it makes no money. So looks interesting does not mean without risk. Application software, quite a few of these made my list. We'll look at the first couple and then we'll move on. It's getting late already. Synchronos Technology, really don't know much about this company except they had a Bible gapped up on Friday above the 50 with a couple of kahunas. What did the market know with a kahuna the night before? I'm going to watch it. It's already had a pretty big move, so I'm not sure I want to chase it. NetEase has been a leader for some time. I did not put it in my leader list because this is not tight, but it's at new highs. It's got great earnings and PE less than multiple. I mean, more than multiple, so it can go higher. Twilio, beaten down stock. And Adobe, also a nice lower left, upper right. And this is tight, and this is why this is in my top stocks list. Communications equipment, a lot to do about Apple, who's about to go into the next cycle move. Apple's pulled back. Doesn't really give me a signal one way or the other today. Acacia is bottom fishing time. Cisco sitting on the 200. I need to see a reason to buy it. So I look at this group. Doesn't look very good. Finisar is trying to get above the 200. It's all about Apple, and when does Apple decide to go higher, which I think is probably sooner than later. E-commerce discretionary. Stock's already had its move, but you got to love JD.com. Pull back to the 50, and next couple days had 3 out of 5 days with kahunas, about to break out to new highs. This is one I'm actively trading and interested in watching closely. Netflix held at the 50. Nice positive day today. Would have liked to have seen a kahuna, but it did have a pocket pivot. Amazon. I'm a homer for this, so keep that in mind. It's my largest position by far. I've held it through thick and thin in 2016, and again recently in 2017. I look at this, and I think Amazon wants to go higher. I've got calls against my shares at about 10.50. I'll probably buy back some of the calls, but I'll probably take half off if it ever gets there. Who says it'll ever get there? And then you got to love Wayfair, W. What a beautiful breakout, lower left. And then tight, upper right. Like this one a lot, and it made my leaders list as well. I'm tired, so I'm not going to go through any more groups, but you can go down the list. I will point out that for whatever reason, steel started moving this week. Deutsche Bank gave the sector an upgrade, and what you saw was a lot of things that look like this. Stocks have been beaten up, have a move up into resistance on Friday with the kahuna. So we'll have to see what happens with steel. So we've looked at the markets in multiple programs. I looked at industry group, and then I looked at some of the top stocks. Again, I showed you earlier, I'm going to repeat it right now, the stocks that made my E-index and just to point out, here's the industry groups: application software, e-commerce, medical devices and equipment. It's fairly well spread out, but if I look at sectors, let's see if I can make this happen. Let me see if I can get this to work. That's not what I want. I'm trying to remember what I'm looking for. Oh, I bet it's over here. I can take any indicator and I can ask where the stocks are. So let's see what sectors. So a third were consumer discretionary. That's interesting. So the Amazon, Carnival, iRobot, you can see them down here. Financials, 16%. Notice Cyrus One is really a technology player. Some technology and some healthcare. These made my broke the breakdown of the leaders for 2000 for where we are in this market. Now, these are extended stocks. So, for example, do I like Wayfair? Yeah. Would I like to buy Wayfair? Absolutely. Am I buying it now? No. It's extended. I'd like to see it pull back into a moving average. Then I might buy it. I also don't like its negative earnings per share growth. So many of these are extended. These are the stocks that will be managed on my buy list, and I'll try and take some of these if I get decent setups. Let me comment on some. We've looked at many of them. Atlantica Yield Company, utility, power generation, sideways mover, 4.7. It had a mobile breakout, a pocket pivot, and Kahuna, and I like the dividend. Teladoc is a leader in telemedicine. It's extended. You can see it here, but it's something that you should keep a close eye on. Look at the volume that's increased in the stock. I think Teladoc's going much, much higher. Several of these we've already looked at already. Another thing to play at this week was solar, and you could have looked at First Solar or SunPower. Similar patterns is a $9 stock breaking up here with a Kahuna and a mobile breakout and squeeze. And then First Solar, let's see if I can find it. Well, I may have taken First Solar out. Nope, here's First Solar. A similar pattern. Most of the stocks that I picked are pullbacks to and ready to run, and let me show you what I mean by that. So these are stocks that made my pullback ready to run screen. And let's just look at Innoviva. Stock ran up, pulled back, been bouncing on the 50. It's now moving up off the 200, off the 50 with multiple Kahunas pocket pivots. Not a perfect one, but this one looks to me like it's going higher. A couple of these were freaking perfect. Western Digital. Here's a stock, clear uptrend, sideways, two Kahunas, a pocket pivot, coming out of a squeeze. Everything is green. This is one where I'd be looking to trade as early as Monday. Summit Materials, same story, sideways off the 50. Kahuna, pocket pivot, mobile breakout from a squeeze. Yeah, that's enough. And here you can take a look at that. Now, just in case you think this is overwhelming, remember if you email me, I've got some cheat sheets to help you, some videos and a PDF. You can make it very easy. You come in, you hit Warehouse View. You go into Warehouse Views and go down to My Name, and then come down here to Scorecard and just pick $2.50 and 150,000. And then go over here into Smart Groups. Find my name and start off with stocks with 3 times big uptrend in volume. When a stock goes up 3 times in volume, I'm interested. Why? And there are a number of stocks here that we looked at. So I might want to take a look at this. The other thing I might want to look at is apply to what out in the view, pull back to the 50 with a Kahuna. So these are all stocks. Let's see if any of them showed up that I really liked. Oh, we talked about Capital Oil and Gas. These stocks had to be crossing the 50 or touching the 50 at some time on Friday with a Kahuna. So this is a scan that is only picking up stocks that have on the 50 with a Kahuna. And then the other setup that I like to look at is go down here to squeezing potential PSI reversal upside. GoDaddy was one I liked. And these will be stocks that by almost always are squeezing. The price is right below the PSAR dot. They're scanned to be in an uptrend. Kahuna's pocket pivots. I find a lot of good stocks there. If you go under Ian Woodward and Ron Brown, I like to start with Best of Woodward and Brown. And let's just flip through this and see how many of these stocks we've already looked at as well. Amazon, obviously stretched valuations, multiple of 188. Earnings per share all over the place. Clearly, Bezos is a genius and he can control earnings. Revenue is hard to control and he does very well on revenue. Certainly tight, lower left, upper right. It also made my leaders list. Alibaba also was on my leaders list. I cut it because I had too many groups in the consumer discretionary. A little bit of a pullback flag here and running again. NetEase, here's that pair of a pullback flag and running again. JD.com, pullback flag, running again. Lumentum, Acolero we looked at. Facebook, nice tight pattern. Well, not as tight, medium tightness. Pretty much close to new highs. Adobe, similar. So the point being that if you go into Best of Woodward and Brown, you can take a look at a lot of the same types of stocks that we saw. So on that note, I think I'm going to call it a night. I'll do my best next week. I'll be traveling some this week. But I think I'm around next week, which will be the long week for the holiday, although Monday I think the market's open some, although I haven't really checked. Trade safe, and we'll see you on the other side. And we'll be watching that E-index, and if there's changes in the E-index, I will put something out on the HGSI board. Lastly, if you are new to me, the best thing that you could do if you want to get further notice is just go to youtube.com